Hi, I'm Grant Stephen.
And I'm Chris Bernier.
And we're the two investment guys. This week, Chris and I want to have a good look at global markets. We'll just have a quick review of indices from around the globe. You know, we've got Toronto up only 3% so far this year in a pretty wild ride. The Dow is up 5%. The S&P 500 is up about 8%. When we look to Europe, we've got London's down 6%, France is down 5%, and Germany's flat so far on the year. And the major Asian markets, Tokyo is up about 3%, and Hong Kong is down about 2%. So pretty mixed results, and nothing really stellar other than the United States has been a strong capital market so far this year. There's a number of issues, again, have come back into the market, and we wanted to talk about some of those and why they're causing the level of volatility that we're seeing right now, Chris.
Sure, absolutely. Well, I think if we look back over the last 3 years, we would see that we haven't seen the normal volatility that we would normally see in the markets. It's been very low, and that tends to breed in a little bit of complacency into the market. Over the last several quarters, we've seen a slowing of global growth, particularly out of places like China, which has continued for some time, and also in the European Union. Another thing that's been going on that's causing concern around the globe has been a continual rising of the US dollar. It seems the US economy continues to chug along. It's shown the best positive growth that we've seen around the globe, and there's been a piling on to that US dollar, which has caused commodity prices to fall.
Right. And you know, in Canada in particular, we're a commodity-based economy, and particularly in light of what's happened with the sell-off in oil. It's not just oil, it is other natural resources, but it's primarily oil that's driven this. And that has a trickle effect, Chris, into the economy. And then what happens is global investors put a macro sell Canada trade on, and that's why we also saw banks and other sectors sell off recently. Mm-hmm. And it leaves investors, with that feeling, what should they be doing now?
Sure, absolutely. Well, I think first and foremost, we would advocate, as we always have, to maintain a balanced approach and be very disciplined in your investment strategies. If we look at oil in particular, it really, if it boils down to global supply and demand, and that will come and go as cycles change. So it goes back to that slowing global growth. But if you have balance in your portfolio, you'll see less negative impact from that price change.
Chris, also important to consider really what is the stock market. At the end of the day, investors are buying a bunch of businesses, and that's how you should be thinking about it. There's good businesses and bad businesses, and if you stick to the high quality businesses in your portfolio, you'll be just fine through all of this.
Absolutely. I want to thank you again for your questions and comments. Please keep them coming. You can contact Grant and I at twoinvestmentguys.com.
Want to take the opportunity to wish you and your family all the best through the holiday season.